So moving on now to commodities. We've seen some fairly big price movements in the last couple of weeks, particularly in the likes of wheat. Why has this happened? First of all, why do you believe this has happened? And is it something that's going to continue?
Yeah, and the big driver on wheat at the minute is exports out of both Russia and Ukraine have dried up. There was a deal with Ukraine where Russia were permitting exports across the Black Sea. That was terminated last week, and the impact has been quite noticeable. The date for the review was well publicised. Very interesting price action running up to that. You saw the price of wheat run up in the previous week. The news came out that the deadline would not be extended, and wheat sold off briefly. It's this idea of buying the rumour, selling the fact, and it played out perfectly. And now the market's absorbed that news, and prices are on the march higher once again. It is problematic. We're still well below the levels that we were 12, 18 months ago, but it is showing one very, very clear fundamental driver for the price here. But there's more than just the Russian story in play. One data report that's fairly regular release is the US Department of Agriculture's WASDE report. That covers things like how many acres of different crops have been planted, what's the expectation for the harvest that year in the US. And this is updated, I think it's every 6 weeks this report comes out. And the price action we see off the back of that is, again, very, very telling. They say, okay, we've planted 3% more acres in terms of wheat, and the price will make a meaningful reaction off the back of it. You know, wow. So it sounds like a small number. Yeah. It's just happening around the sides, but it's not just the geopolitical situation that we're looking at here.
Yeah, I mean, not just Russia as well. We saw in India they've decided to ban exports of all types of rice apart from basmati rice. I mean, do all of these things factor into inflation as well? Could this potentially see a rise in food inflation?
I think if you look in the UK at how the ONS calculate inflation rates, these increases in rice and wheat and the like aren't going to have much of an impact. Yeah. We've got far wider factors. Things like the shortage of labour in the UK, that's having a massive problem because that means the shop have to pay people more to work there, and that's factored into pricing. Oil prices being high, it costs more to move the goods from the port to the warehouse to the retailer. So you've got a lot of other factors in there. I don't see it as being a problem a meaningful problem for the UK economy. Where it does pose a big threat is in lesser developed countries such as Africa, especially East Africa, where they're very reliant on those imports from both Russia and Ukraine. And then you're into a whole other realm of societal impact. There will be a problem there. You do have obviously the classic economic situation of substitutes. So people will find if wheat is too expensive, well, what can I make with corn? Yeah. You know, this is a long-standing principle. But yeah, the risk I think is probably a human one rather than an inflationary one at the minute on that.
Moving on to oil now. So, there's been questions over China demand in recent week. We've talked earlier about the bolstering of the Chinese economy, potential stimulus. How do you see oil play out over the next kind of few months?
There's an awful lot going on. There's big talk about, well, given the weather we've had this summer, is Europe going to face a warmer than normal winter, which could obviously, help curtail demand significantly. Yeah. But also off the back of that China story in recent days, we've seen an uptick in demand for distillate products, gasoline and heating oil, things like that. That's impacted on the upside. So there's a lot of competing pressures in play at the minute. Production in the US is tailing off a bit. Crude prices aren't that, they're not as high as they were, 12, 18 months ago. People are, producers are having to make that careful call over, at what point do I break even digging this stuff out the ground and getting it onto a boat to a refinery. So, we do have that very real risk to be playing with at the minute. And the other factor is, what will OPEC or OPEC Plus do? If they want more money, the solution's simple. They just rein in production. I think round about these prices, shale oil's too expensive to produce in a lot of places in the US. So you're left with just the classics, but you do have that buffer now on the upside. That once you get over $100, well, there's far more opportunity to drill oil or oil-related products at a profit.
Have you got your eye on any other commodities at all? Any soft commodities?
Obviously, we've just been talking about oil. Another interesting one here is sugar, because a lot of countries can use sugar to make ethanol, a biofuel. So if oil prices are high, demand for ethanol, again as a substitute, goes up. Less sugar in circulation for, sort of making cakes with and putting in your tea. And the impact is that prices in the underlying go up as well. So there's a really significant correlation between oil prices and sugar prices. And as we don't really know what's going to map out in the coming months regarding demand for oil and how supply might be constrained, that's one that I think will be an interesting trade to watch over the summer.
Brilliant stuff. Great insights today. Thank you, Tony. And don't forget to like and subscribe and join us for next time.